All right, guys, welcome back. Another episode of Chart Talk. We'll jump right in. So again, we've had a very nice end of last week for the most part. We had this nice V bottom off of lows past few weeks, and we've had this tight little Mickey Mouse flag here at highs, and the expectations were seeing a push through this retest area, which tends to be a pretty common occurrence when you get back to highs. You push through. Last minute traders that are chasing the move or chasing the market try to push through here, but the sellers just held this 690 down, to a T. And then we had a little bit of a sell on Friday. And then today walking in, we had that, we kind of gapped up in the middle of the range, and it kind of, could have gone really either way. It could have been, this break, gap up and go through the all-time highs, or, intraday and down, which is kind of where we're at. So it seems like the writing is kind of on the wall that given this 10-point range, 680 being support, 690 being resistance, that we're probably going to have to kind of shake out this 680 area. And again, this measure move is about 10 points. We talk about these range of these flags. Typically, you can expect kind of a one-to-one, breakout or breakdown given these consolidations. So we refer to this more as like a Mickey Mouse flag. And again, move down to 670 is almost a who cares. It's barely a percent move. But I kind of have these arrows drawn here where we're in this range bound market, and we can't expect this to perfectly happen again. This would be 3 months later. But we're in this range bound. This area is resistance. 650 has been support. And we want to be thinking that we don't want to be buying up here. We want to see the breakdown. This is kind of middle of the range right here. You don't want to be taking much of a stance in the middle of the range. You want to be waiting for this move down to the 660 area. We don't want to be perfectly buying 650, because the more times it gets down here, this major support area, the more times it's going to touch 650, the more of a likelihood that it's going to actually break down lower. So we don't want to be able to buy 650. We want to see the market pull in, kind of hold around this like 660 area, start to base out, trade sideways, and then you get that move. I'm trying to visually show with these arrows here. Red we want to avoid as it pulls into the base, and then look for the buys on the way back up through, this like 660 area. And we've seen, for a couple months now, the breakouts really have been waking up through this area. So we want to see, or we should expect, this breakdown through 670, 680 area, see the breakdown to pull back into this range. And again, it's just a range bound market. This is what we've been seeing. Shouldn't be, much of a shock. Again, we're at all-time highs. We're few points off all-time highs. Very strong market overall. Individual names, kind of a mixed bag. So moving on. Again, Dow 30 names have been super strong lately, still very clearly in this breakout channel. Again, in the weekend newsletters highlighting, just the obvious resistance area, red line, resistance, green being support. In the Dow, this 46,000 or 460 in the DIA is the key out, similar to 650 in the SPY. So we know where the key outs are, very defined places of when the market is going to break down, or we should get out to avoid them. But for now, we're in this breakout stage. Dow names are near, getting very close to major resistance that's held all summer. This pattern really shouldn't change until this break of support. So visually, you want to be buying closer to here and taking profits closer up here. Now, the NASDAQ names have been a little bit weaker. It seems like the Dow 30 names have been the strongest. SP names have been, doing all right, kind of flagging out. And then the Qs or NASDAQ names have been the weakest in this past couple of days. So we had this V bottom, and we're kind of getting that little like H over, back to support. Now, when you kind of see these, kind of like little waterfall, or if I have a line here, I kind of draw the H, you have you have the bounce, and then you have this H back to these lows. Now, if you get this bounce back into support, a lot of times either you have a massive breakdown, or into these H's, you have a dramatic reversal. So it's kind of the markets have been overall very strong. There hasn't been this dramatic weakness, but as the Qs kind of H over into this key support area, this is where the buyers are going to defend it, or sellers are going to just kind of hammer it through. So, as the Qs come into this key support area, this is going to be kind of the make or break for this index in the short term. We've started to see some sectors breaking these breakout channels, which is not biggest deal in the world, but you do want to see this area hold and that very fast snapback out of it. You don't want to be kind of hovering here, even for the people. We don't really care about Bitcoin, but it did show us the opposite of what we want to see. So, broadly, for a moment or two, we can talk about Bitcoin. Again, very clear breakout channel Bitcoin's been in until, and I have this drawn here, this is from a few weeks ago, expecting it to go back to 60,000, this was the key support. This was key support, key support, key support, and lastly, key support breaks. So once that breaks and now starts to act as resistance, that is not what you want to see. The last 3 weeks, Bitcoin has just turned what was support into resistance. And this is pretty much that same H pattern. You have that initial leg down. You have this. Let me get rid of some of these yellow lines so it's a little easier to follow along. So you have this initial leg down. You have this little bounce. And now you have the remainder part of the H where it more than likely breaks. If it breaks down through 80,000 and you have, kind of support, new resistance now at 9,500 to $20,000 range, that's, pretty much why I have this circle down here at 60,000, because that's the measured move of this H pattern lower. So tech has been weak. If tech pulls into support and starts to break it like it did with this candle for Bitcoin, then you should start to expect that waterfall lower. If it can hold and mount, then the party continues. But just something to keep in mind. So again, dollar's been pretty weak. Good sign. Again, last couple of weeks we were just keeping an eye on this 100 area. For the last month, it's just been pulling in and breaking support, which typically helps equity prices. So it's good to see. Again, the stronger sectors out there really have been the consumer discretionaries. Again, we're expecting like a 10% breakout through this 400 once it can really break and close above it. Again, we have all-time highs. Takes nearly a year to get back and retest, which is in the past few months, flags out, and now it's starting to try to break this 400. It really hasn't, taken a really definitive stance here yet, but it's been looking much more likely to break out here than it did the last few attempts. And a name that we've been holding for a couple months now, and we got it through this 360. Tesla is definitely in the consumer discretionary space. No shocker that this name also is, pretty much, trying to test, these all-time highs here. So we've had this, flag forming for the past few months now. This is kind of the resistance area, and now we're finally starting to see that breakout higher. So I know my buddy Connor's still in it. For now, really, this is the key out for us. We bought 360, 380s are out. Again, this measured move of this pattern, talked about before with the, this fine, this 10% flag, the Tesla's pretty much like, 80 to 90 point flag here. So in the short term, if this breakout continues, profit taking target somewhere in the mid 500s is a somewhat realistic target given, the pattern that's been developing, since September. So we're still sticking with it. We haven't really been red in the name since the moment we got into it. So we want to keep holding those winners and sticking with them. But bouncing back to the sectors again, consumer discretionaries look great. Healthcare has been very strong. Had the retest of the prior all-time high. It's breaking back through it. Looks very good. Biotech still trying to get back to its retest area. Biotechs have been very strong as well, definitely playing catch up in this later part of this, market rally. So we have the semis that retested last week, a little bit of an avoid in the short term until they pull back into this range. Again, we're seeing this shift broadly for most of the market and the sectors out of a very easy breakout stage into a topping pattern that really is just a range of market at highs. So you don't want to be buying retests. You don't want to be buying all-time highs. You want to be buying up off support. So avoid the semis right now. So the same thing with telecom, retesting that high. Again, has to kind of pull back in into that range and then kind of set back up. Energy names still flagging out onto this breakout level going back, many, many years here, this 132. Keep an eye on energy, but it's going to be a slow breakout. It's going back many years, 4 or 5 years here, still can't break out to this level. So, the only key sector really right now we want to avoid, again, we're talking about these breakout channels that's starting to break to the downside. We're seeing that with utilities. Again, even tech itself has been a little weak, kind of aging over a little bit. But again, this is the broad range of a market. You want to be thinking, buying up off the support and selling into resistance. So these are the resistance areas. These are the support areas. It's not the time to buy just yet. You want to be, walking into the front of the, the train, so to speak. Let it pull in, let it settle out, and wait for those buys back on the way back up. So definitely some, mixed bag with the sectors, but the key theme here is the shift into a range-bound market, buying support, selling resistance. So still keeping Gilead on the radar. Talk about healthcare being very strong. Gilead has been very strong for the last year or so. It's finally gotten through its prior all-time high. And now we're waiting for that next attempt back through that 129 level in time. So we're going to jump into a couple of good and bad trades from last week and this week. So last week, again, the big focus for us was this NVIDIA. Again, one of the best charts at the time that we were seeing, very textbook breakout level that's been forming. Semis were strong, running up into those prior highs. And we had gotten a nice position in this NVIDIA through this 183 about a week or two ago with a tight stop versus 180. So we got into it, right here through 183. We had a stop versus 180, push up into that breakout area. Had some news on that Thursday, or I'm sorry, because that Tuesday, it was gapping up after hours. It was like 192. It looked like, this thing was going to be running back to highs. And by the next day, opened underneath the breakout level, and it just wasn't ready. So, after hours, we're seeing it trading at 192 on news. And the next day, it's opening under the prior breakout level. The writing on the wall was to get out. So we did manage to get out of this marginal gain. I'm just going to call it a break-even trade. But we bought that 183, and got out, and it's been somewhat of an avoid since then. You had this kind of bearish engulfing day here, and for now, again, it's just still in this broader range, and we were buying the resistance area of this range. I'm talking about it's a range of market. This really wasn't the buy. We need to let this thing pull back in, get back to this 170 area, and find these entries back up through 170, back up through, 172 if it pulls back in. So NVIDIA for now, kind of off the radar until it pulls back into more of the support area. So it was an okay trade. We put ourselves in a position to make money. It worked in our favor. After hours that day, it was trading at 192. So from our entry, we're up like $9 on $3 risk, but didn't work out. Next up was this XYZ. So when we got out of NVIDIA that Tuesday and Wednesday of last week, we saw a very, tight risk setup in this XYZ. So I'll zoom in a little bit more. And we just saw, this pocket of inside days here. And we saw just a very tight support buyback. So we saw, couldn't really break this 60. couldn't really break above 63. We saw, pretty much like this 62, 62 quarter area was like the key spot. So again, we bought on the way up, back up through this break. Again, we knew where our out was initially. By the time, the close of the first day, we knew our stop could have been break even. I'm sorry, low day. So we're risking about $1 in the name. Not, no big deal. Next day, decent price action, nothing to lose sleep over. Friday was definitely some good information to see. Again, on Friday, the market was selling off. This is Friday's action right here. So market's selling off, closing at lows. XYZ, pretty much closing at highs. Can't really ask for much more. And again, we're talking about a range of market, and our profit targets to start to take profit in this name was in this 66 to 68 area. This was like the area of where we ideally wanted to take some profits. Coming into today, I'll change this to a 15-minute. We had some offers out, and I had an offer to take profits. The first one at 66.48. High day was 66.40, so it's 8 cents away from getting that kind of first kickoff. But once it gapped up, pushed up through highs, reverse lower, it was time to, get out of Dodge. We couldn't get that first kickoff, 66.50. So, took most of the trade off, a little of that break of 65 half, and then got pretty much fully out a few months later once 65 broke. So this was kind of like that gap up reversal. Market was looking a little shaky today, so no sense in giving this thing back. Take the 5% win and move on. So we did pretty good with that. I know Becker did very well with it as well. And since we got out, it really hasn't done much. It did kind of bounce back midday, but again, quickly faded, and rather take the win and move on. Now, probably the worst trade I've had recently has been this Apple. So coming into the week, again, talking about a few weeks ago in the video, was like kind of the best chart out there that we could find. Risk reward wise, Apple coming into this week, also kind of best risk reward setup that I also could find. Apple's trading, pretty much at all-time highs. Very, very strong name overall. Very tight consolidation at all-time highs. Past week or so, 5 or so inside days, very tight action, and wanted to buy up through 280 for that run back to new highs. So got triggered in pretty much right off the open, which is not the ideal entry we want on a Monday morning, but with buy stops in, that happens. And at the time, admittedly, I was focusing a little bit more on what Tesla was doing, because today it was breaking out to, new 52-week highs, along with XYZ gapping up. So I was focusing a little more on these two names than I was with Apple, and just, ticked me in, and, not much to do here. So again, as bad as this looks, this was, Apple's down 1.5% today, pretty much was down 2% from my entry, given I pretty much marked the open. And when it comes to getting in off the open, you kind of have to give it the first 15 minutes to really see what it's going to do. I can always say, oh, I should have put a stop in below this low or right as soon as I got in, but it was right off the open. Market looked good, and Tesla was doing great, XYZ was doing great. So 1.5%, 1% or 0.5% pulling 5 minutes off the open, it was like no big deal. We'll see where the dust settles. But once it quickly started to just get smoked for the whole first 15 minutes of the day, it just seemed like the writing was on the wall that this key pivot low area was, going to get smoked, which it didn't really. But again, this thing was wrong from the moment I got into it. I was down about 2%. And once it started breaking this 274 area, I just had to take the L and take the 2% loss and move on. Again, it did, bounce back a little bit, but this name was clearly not ready. So any exit was just going to be for a loss. And zoom out, clearly some very key information that this name is just not ready yet. We had the tight risk entry, didn't work, worst trade in a while, lost 2%. It is what it is. So moving on to a couple alerts. So let's see how they've been doing. Again, this RTN we had this, blue sky breakout alert that just triggered in today. For anyone who's in it, again, we're talking about this range bound market, and this thing's kind of breaking through all-time highs. For now, stop is prior low a day versus like 176 area. Looks good for now. Keep it there. If we get continuation tomorrow, raise that stop to low a day. You're risking, $1 at an all-time highs. Hilton, again, we had this alert a few weeks ago through 280. Didn't really get the love. Similar with Apple, we had that breakout. A couple days came right back. Sneaky buyback. Just that when that breakout level, again, we can see Hilton was setting up for many, many months, many attempts. We try it there, it doesn't work, comes back in, tries again. This is often the time where you get that run to the newer highs when less traders are keeping an eye on it. So for now, if you're in this, stop versus 278 area, 279. Keep the risk very tight. No need to give this thing back any bit. If it comes back to this price, it's going lower. So stick with it. If it's pushing higher, it's coming back. Take the break-even trade. Again, we're seeing a lot of this same action with these breakouts lately, and this is why we're talking about shifting to buying off support in this range bound market. So IBP had that breakout, came right back, break-even stop. Nothing of a loss, but we're just seeing the breakouts not having a bit of that follow through. Again, same thing with this eBay. We're keeping on this eBay through 84. One day up, back into the range. We had a nice little alert in FANG through 150. Nice little move. I know Darren made some money in it. I believe he saw it up at like 160. So nice 10-point move. But we're going to see that this was a key breakout area, this 150. And we're going to see this come back and either create support here, or probably shake up below, and we'll get like another attempt to, trade this. For now, you got resistance 165, you got support 142. So we want to let this name, pull back into this range and then set back up for that next run. This CRSP, we had that nice, support buyback 2 weeks ago, and now we're seeing this, broader second entry through this 60 forming. Still not ready just yet, but keeping a close eye on this name. And an ALK was one that definitely took a lot of us by surprise. Just 42, nearly $10 higher, traded higher every single day. For now, you keep a stop versus like 48 area. If you're still in it, definitely can make sense to be looking to take some profits given just the run it's been on. Again, moving on a couple names to keep on the radar. Again, this EDU, big base here has been forming all year. Tried it, just like that Hilton example, tries to break, pulls back in, sets back up, often the time that most people forget about it. So keeping a close eye on this 56 break. AS was another example of that like sneaky buyback where we tried this breakout a few months ago through that 40, got a 1 or 2 day pop in it, came right back, wasn't ready, shakes out, gets back up there months later. Most people or most traders have forgotten about this setup from back in August. These are often the times when you get that breakout, that sneaky time when most people aren't watching it. So keep an eye on EDU, keep an eye on this AS through 40. Team is breaking support. Again, we're trying to keep an eye just for the 80 break. We're not trying to catch us on the way down. SoFi is still a pretty interesting name. These recent IPO names, they get back to highs. Definitely want to keep an eye once they can really break and clear. Again, it's been a bit choppy up here, so might need to shake out a bit further, but back up through 28 in time looks phenomenal. And again, the names we want to avoid, we've been talking about how we avoid names that split their stock for at least a month or so. You can see it's been just close to a month, and Netflix has traded lower every day post that split. So these are reasons why we avoid stock splits to the best of our ability. just let the name continue to rinse out. And this like MSTR, this is why you don't want to chase like the gimmicky idea. A year ago, everyone and the mother thought this was the best stock in the world. It had a, you know, impossible approach of just buying more Bitcoin and it was going to always make money. When Bitcoin starts to go down, this thing is getting, crucified as a result. So this is why you want to stick with the simple names, the simple setups, not the gimmicky, it's here today, gone tomorrow kind of names. This thing's down 60, 70% from where it was, a year ago. So again, the key theme this week going into the end of the year, you have people taking tax loss harvesting. If they have a bunch of gains and they're holding a loser or two, and they want to offload it. The weaker names going into the end of the year, the names that are near 52-week lows that have gotten beaten up this year, those are typically the names that get beat up even harder because you have people that are just trying to get rid of them to clean up, their portfolio. And you have even fund managers, doing window dressing, doing the same thing, just getting rid of the losers to make the, remaining names look even better. So the last couple of weeks, lighter volume or percent of all-time highs, probably need to pull back into this range. It's a great time to recap the year, look back at the trades you've taken, the best and the worst, the lessons taken from each, and start game planning the year ahead.